Well, let's get to our first topic of discuss for the show today. Nigeria's inflation, according to the National Bureau of Statistics, worsened. It climbed to 17.71% in May 2022. Well, this is the highest in 11 months. According to the new Consumer Price Index report for May 2022, the headline inflation rate increased to 1.78% in May 2022. Well, this is 0.02% percentage rate higher than the rate recorded in April 2022. That's 1.76%. Nigeria's inflationary trend has been described to be one of the highest in the world before the war in Ukraine and is likely to increase further as a result of a rise in global fuel and food prices caused by the war. Given the rising cost of commodities and the unabated macroeconomic indices facing the country, analysts are of the view that headline inflation rate in the coming months is likely to maintain its uptick if the issues fueling this trend are not curtailed. However, current inflationary pressure, according to the World Bank, will push an additional 1 million Nigerians into extreme poverty by the end of this year. Joining me live via Zoom to look at this development, she's a senior manager at clients and industry at Deloitte, Damilola Akinbami. Thank you so much. It's good to see you. Thank you for your time.
Thank you for having me. Good afternoon.
Yes, of course, I would like to regularly start this way. Inflation for the month of May, of course, rose to its highest level in 11 months, from 16.82 to 17.71%. What exactly were you expecting, and what could be responsible for this continuous rise?
Well, I was expecting a further increase in the inflation rate for Nigeria for the month of May. And that's because the inflation stoking factors are not abating. There hasn't been any respite seen so far. And what are these factors that are contributing to the heightened inflationary pressure? They're still the same usual suspects. So you have the war-induced supply shocks that are affecting output and supply. You have rising energy costs. You have global price pressures and the exchange rate pass-through effect, which is leading to an increase in imported inflation. I mean, if you look at some of our trading partners, global trading partners, the US, the UK, they are also recording an increase in their inflation rate. Apart from China, who in May, its consumer price index was unchanged. However, the producer price index defied the global surge. We also have energy costs, which are on the increase, and all these are occurring at the same time when the planting season has commenced. So, like I mentioned earlier, the inflation stoking factors are not moderating, and it's not just a local phenomenon. This inflation problem, it's global. So it's something that is happening across the world. And that's because, one, most economies are just recovering from COVID, and then the war commenced. So the war has exacerbated some of the challenges a lot of countries have been facing due to low production levels and shortages of major commodities.
Let's move quickly to food, which everyone will be interested in. Yes, everyone wants food on the tables, and it's also significantly high. But now I want to look at it from the angle of interventions that we've had from the CBN and other interventions. What exactly are we not doing right in that space?
Well, what we can see right now, the fact that, one, commodity prices are on the increase, they're rising. And if you look at even the National Bureau of Statistics report that was released yesterday, the further breakdown shows that, one, food inflation is almost at 20%. And the commodities that recorded the highest increases were bread and cereal and tubers. And bear in mind that bread is an end product of flour, which is gotten from wheat. And Russia and Ukraine, the two countries that are at war, account for at least 20% of global wheat production. And also tuber, interestingly, Nigeria is the largest producer of tubers, yam, cassava globally, and notwithstanding domestic prices of yam and even cassava are on the increase. So that could also be as a result of when the planting season has commenced. And if you even look at the market right now, what you would find is old yam and not the new yam. So definitely we're seeing these price pressures occur. And like I mentioned earlier, it's a global phenomenon. So the fact that global commodity prices are on the increase, that would filter into the economy. And aside from that, look at the factors that I mentioned earlier. You have the exogenous factors, which as a country, you have no say or control over. So what are the endogenous factors that we could address? One of it is insecurity. I forgot to mention that when I was talking about the contributing factors to the rise in inflation. The insecurity level or situation in Nigeria has continued or even heightened. We also look at the fact that, one, you have post-harvest losses. So despite the fact that you might have we record a robust harvest season, but if you don't have the required preservatives, if you don't have the required storage facilities, you will still lose a lot of this harvest, and you lose out on the gains. And even touching on the fact that insecurity is playing a major role. If the farmers can't access or go to their farms, then they won't be able to plant. And if the planting levels are reduced or affected, harvest levels too are also going to be affected. So these are some of the factors and challenges that are at play and that are also affecting food inflation, and it's going to continue. So to an extent, yes, we've seen a lot of intervention measures from the government put in place. But like I started my conversation, a lot of these factors are cost push factors and they're exogenous, which we have no control over. And if we look at all the inflation trends of other countries, the major driver is food prices. So it's going to continue in the near term.
Interesting stuff there from you as usual, but I'm worried. Like you said, we can't control some of these issues, and as Nigeria moves towards the 2023 elections, there is that worry that there might be a shift away from governance and all of that to politics. So I'm looking at it. Are we going to continue like this up till then?
Well, typically in an election season, you tend to see an increase in the level of money supply, and that's because of campaign expenditure. You see a lot of spending going on during the campaign season. So that would definitely trigger what we call demand pool inflation. So they have increased level of money supply, which is demand pool inflation, coupled with the ongoing cost push factors. That would definitely lead to a further rise in inflation. So, I mean, we're going to see inflation levels in Nigeria remain elevated. But at least down the line, I mean, towards the last quarter of this year, which coincides with the harvest season, we might see some moderation, albeit marginally. And also bear in mind that the fact that there is weak consumer demand, that will continue to mitigate the level or the pace of increase in these food prices. Because, I mean, you can only purchase or demand for what you can afford. So we're still going to see that play out. But definitely, I mean, for the better part of this year, consumer prices are going to remain elevated.
Let's now move on and talk about the big one. Many say the CBN monetary policy's decision, one way or the other, would have also affected or influenced, or one way or the other, caused us to be where we are at the moment, talking about the inflation for this month. Do you think any effect of that? Are we feeling that already? The 11.5 increase to 13%.
So the monetary policy rate was increased in May, and this is June, so it's just been 1 month. And there is a time lag between policy announcement, implementation, and when the impact is felt on the market. So it's what we call the transmission effect or transmission mechanism. So time will tell as to whether the impact has been felt. But however, bear in mind that the current inflation trend in Nigeria is driven by cost push factors. So increasing interest rates to address cost push inflation is not sufficient. So you have to blend that with a mix of other policies. And if you look at even all the factors that I mentioned earlier contributing to this rise in inflation, so you need to address the interest rate policy, there's the exchange rate policy that needs to be revisited, you have infrastructure policy, investment policy, fiscal policy. So it's more of a mix of policies. So it's not just one size fits all, and it's not just doing one or addressing your interest rate policy while the other policies are moving at variance. So if you have, and again, it also goes to timing. You don't want it to be a situation of too little, too late, and you don't want to be too aggressive, which could lead to overheating of the economy. So definitely, you would need to complement this interest rate hike with other policy measures, because inflation is no longer transient in Nigeria, it's now structural and would involve a cocktail of reforms.
The World Bank has come out, as usual, we can't always push away what they say. They've come out to say, with this rising inflation and all of that, an additional 1 million Nigerians might be pushed into poverty before the end of 2022. We know that there's a policy on grounds to try to address poverty, and a number has been put on by this administration. Do you think all of this is working out? And what do you think about this recent comments from the World Bank?
Well, the World Bank's comments are worrisome. And when there is inflation, what happens is that the purchasing power of the consumer is eroded. So what that means is that what you could purchase or afford before, you can't afford it anymore. So for instance, if I could go to a shop with 5,000 naira, maybe come out with a trolley full of commodities right now, and maybe that happened two years ago. Right now, that same 5,000 naira will not be able to purchase or buy the same level of goods. So that just shows you that your real income has been eroded. And what that means also is that more people are gradually falling below the poverty line. So when you have high poverty rate, and bear in mind that it's not just the consumers that are being affected, you have also the manufacturers, the corporates. So if operating costs increase, production will be affected, and manufacturers and corporates, what they will tend to do is that, to at least do it because of the narrowing profit margins, what they will tend to do is maybe adopt belt tightening measures and may decide to go lean, and that could lead to an increase in unemployment rate. So if you have rising poverty rate, high unemployment rate, that could lead to further instability or imbalance of the macroeconomic picture of a country.
For our external reserves, as we wrap up this segment of the show, I also continue to and fuel subsidy bills continue to rise. Even the Minister of Finance is coming out to say, this is worrisome and we must look at it. Volume of debt is also on one side. How much of an effect do you think this will have moving forward, Damilola?
Well, yes, reserves level have been depleting. Funny enough, as at last week, or at least based on the information provided by the CBN on its website, we've seen, a gradual uptick in the reserves level. How, if this is going to be sufficient or is going to continue, I don't think it's going to be, it's going to persist for long. I think it's going to be short-lived because of the growing demand forex backlog amidst the fact that we are recording a decline in our forex receipts. And talking about the growing forex demand backlog, oil imports account for the largest item on the government's import bill. And that's because of the increase in international oil prices. That coupled with the rising subsidy levels. So we're beginning to see increased pressure on the government's fiscal coffers. And that obviously would affect the revenue projection. So what would the government do? The government might decide to increase its borrowing levels. And bear in mind that at least based on the Q1 2022 debt numbers that were released, Nigeria's total debt stock has increased by over 100% in the first quarter of 2022. That is worrisome because also our debt service burden is increasing. So on one hand, the government would need to bridge that widening fiscal gap. If it decides to borrow from the international market, global interest rates are increasing. The US increased its rates yesterday. The UK increased its rates today. So definitely it's going to be more difficult to borrow internationally. And bear in mind, even the federal government's plan to raise about $950 million from the Eurobond market was suspended due to unfavorable pricing. Also, in an election season, there's a lot of uncertainty, and investors are going to place a premium on your debt instruments because of this uncertainty. So it becomes even more expensive to raise funds from the international market. So the government may look inwards. And if you look at the debt figures, Nigeria's domestic debt accounts for 60% of the total debt, while external debt is 40%. So the government may decide to increase its rates to make yields attractive for domestic investors to buy into its fixed income securities. So it's going to have a major impact on Nigeria going forward, especially if the expenditure plan continues to increase as a result of what is happening in the international market.
I'm done, but many will say hiking rates at times is to rein in inflation. But in Nigeria's case, wrapping up, do you think that is working for us. I've had arguments that might not be the way to face or address inflation.
Like I mentioned earlier, what is happening right now in Nigeria is cost push inflation.
Yeah.
So increasing interest rates to address cost push inflation would not be sufficient, and you would have to complement that with other policy reforms. So both in terms of the fiscal policy, because if you look at the fiscal policy of the economy of the government, is more expansionary than contractionary. And like I mentioned earlier, this is election season. So we're going to see increased government spending. Also, you need to address your exchange rate. What is the investment policy? What is the infrastructure drive? So all these measures have to be implemented at the same time, not one after the other, and the right mix at the right time to get the desired outcome.
Right mix at the right time. That's my take home. And I'm sure viewers will also take that. Thank you so much. I've been speaking to Damilola Akinbami. She's a senior manager, clients and industry at Deloitte. Thank you so much for your time on the show. Interesting conversation. Do enjoy the rest of your day.
Thank you. And you too.